The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as Tuesday's session went along, we faded well off the session highs in the grains and oil seeds. Bean oil did finish with its seventh straight higher close and good support there, but everything else was definitely well off the overnight highs. So what does this mean moving forward? Was this an opportunity for farmers to do some catch-up sales? We're going to talk about all that and more. Joining us now for conversation, Brian Split with agmarket.net is with us here on Market Talk. Brian, good to catch up with you again, buddy. How are you?
Hey, I'm good, Jesse. How are you doing today, bud?
Hey, I'm doing all right. Doing all right. I think maybe some farmers listening into might be doing a little bit better. Maybe took advantage of some of this price rally here over the last 48 hours, so to speak. Man, oh man, though, that rally in the grains, Brian, I just kind of watched it start with the open at 8:30, and we kind of just quickly faded into the close, well off session highs. I immediately thought farmers selling, impacting corn and beans. Would you say that was the case, or was that just a piece of the puzzle, Brian?
Yeah, I think there's kind of two pieces to that puzzle. Because remember, there was an awful lot of buying yesterday, and there's a lot of questions like, where did that come from? Why do we do that? We knew that Brazil has been dry, and yeah, maybe the rain that's supposed to hit Mato Grosso is going to come in a little later than we thought, but it's still in the forecast. But, was that 30 cents worth of buying in beans? So then today we find out China took a lot of measures to, provide stimulus, right, to help stimulate the economy. And so I think that's what yesterday's buying was about. We just didn't know it yet. And then there was kind of that, again, element of what happens. There's a little bit of a buy the rumor, sell the facts. So when the news actually hit today, there was profit taking, after the open this morning. And yes, absolutely. We hit some major levels here in corn and beans that have been resistance. Corn has really had a hard time in the teens here recently. So I think when we get back up to the upper end of the trading range, we're seeing little nibbles there. But I think there's an awful lot of beans that have been sold here in the last couple of days. From what I gather, there's a lot of producers that are looking to sell a good portion of their soybean crop out of the field. And so when you think about today, this morning, we were about $1 off the lows from August. And it's a very opportune time right now because that window, to make sales before the beans cross the scale is getting shorter and shorter. So it's one of those timing things. And right now the market's helping you. And I think you have to make sure you reward that because this stuff can very easily change and focus on a different narrative just as fast as what we just put on in the market. So I think you want to take some nibbles out of the bushels that you have to sell out of the field and make sure that you're rewarding the market at each of these days that we have a pretty good step higher.
Thinking along those lines, let's kind of lean in a little bit more to that trade of thought here in quarter beans. And you reminded me of this before we went on the air, Brian, that we kind of had a similar type of counter-seasonal rally type move last year as well, kind of that September, October time frame as we were going through harvest. And so it kind of looks like maybe we got another one of those here that has been a good opportunity for farmers here to take advantage of getting some of those bushels priced here right now, Brian.
Right. I mean, when you think about the bean market last year, it was a South American weather rally that, it petered out in mid-November. That was the timing of it. And we don't know when this one's going to stop or, maybe we get some rain, they get it planted, and then there's a separate one down the road. We don't know. But generally, when we get a South American weather rally, that is a secondary opportunity for producers to do marketing because unless there's a catastrophic problem in South America, that's probably going to be your best opportunity until our own domestic weather market again next summer. So again, it's kind of one of those timing things where there's bushels that you have to deliver at a certain period of time, and you want to get those priced and avoid paying interest on it and storage fees if you don't have your own storage for it on farm. And so I think you have to use the South American rally as a way to do that marketing that maybe you missed out on the way down. And the nice thing about it is that because of the way the grains have traded and overall in a bear market, a lot of the volatility has come out of the options. Recently we were sitting at 6-month lows in the volatility value. And so there's certain things that comprise the value of an option. Time value is one of them, and that's a big component of it, but that is static, right? Time decay is one day at a time. Volatility can change rather drastically, and that can make options really cheap or very expensive. And so with a lot of the options in ags for corn and beans recently at near 6-month lows, it doesn't cost a lot to replace a physical sale if you still want something in place through the South American growing season. You can go out to a March option and again, price something that I think is pretty reasonable if you still want the ability to add to your sale if there is an upside without, and at that point you're eliminating the downside on the market on those bushels to the extent of what you pay for that call position.
And that's a great point you bring up. I think about all those tools that are in the toolbox that farmers can take advantage of here instead of just making a straight cash sale and being done with it. To your point, you look at options, strategies, different things that are out there to kind of, leave the top side open, so to speak, Brian. I mean, there's a lot of folks that maybe sometimes they're a little nervous to do that or hesitant to do that. They've never really played in the futures and options market before, but it feels like now more than ever, there's a lot of opportunity there to help kind of manage your risk, right?
Yeah, I mean, so for example, in our hedge program, and this is something, our company provides for our clients, we recently made some sales and the recommendation was not to do it in the account. It was to do a cash sale. And so we did replace those sales with options, and we went to March and we spent 18 cents on those call positions. And so again, when you think about that, I mean, 18 cents can happen in a matter of hours, right? We were off the highs this afternoon by 18 cents from this morning. So in the context of the bean market, 18 cents is not a lot to give you the potential to add to your sale if the South American story gets bigger or there's a different one a couple months down the road. Again, we're going out to where this option is there till late February. So I think whenever you take big chunks off in beans, when you're doing marketing, it is wise to spend a little bit of money and protect the other side of it, because beans are those types of market that they can make a very large move in a short period of time if something happens that the market's not expecting or not pricing in. So we typically want to do that, but our goal on our bean sales was to get to a high level of actual sales come fall. And we're starting our Nov 25 program. We've got 10% of HTAs done today. Our goal is to have about 30% of next year's crop hopefully sold in this particular rally that we're experiencing right now.
Yeah, a lot of things to take advantage of and think about here in this window. And Brian, as I looked at that November bean chart, it looked like 1058, that new high, is probably going to be our new area of overhead resistance. Am I seeing that right when I look at that here today, Brian?
Right. I mean, anytime you make a high and you pull back from it, that's kind of the new little, all right, now that's a very important high. When we think about what beans accomplished so far this week, we did make new highs for the month. So we had made some highs on September 6th, and that was that reversal that we had. It was a Friday, and it was 1031 and a quarter. And so we got through that yesterday. And then when we did, we went right to the next spot, which was the high during the month of August at 1042. Right, we went to 41 and 3/4, and then we pulled back. So overnight, we get through 42, we go right up to the next spot, which around 1060-ish is a retracement level. And so it's like, yeah, you get to the next spot, you pull back, you revisit the old resistance that now should be support. So we did close over 42 in beans today. Again, it wasn't at the highs, but it was still above some resistance, so it wasn't the worst close. But yeah, it's going to be one of those things where I think it's going to stair step. It's going to be, if there's a major level, it's going to take a lot to run right through it the first time it sees it. So you're going to see this back and forth type trade in soybeans. I think at this stage, as long as beans are holding that previous high for the month in that 1030 area, that this move that we're seeing is still sound. But I think if you're watching the bean market and you're saying, it's moving higher, I know I need to sell some, I really wouldn't let it get much below 1030 before I pull the trigger.
Brian Split with agmarket.net is our guest analyst here today on Market Talk. Brian, you mentioned China and that news earlier in the segment as well. And thinking about that, I know China's been sniffing around and buying some more U.S. beans as of late. And there's some more rumors that they've maybe made some big purchases here over the weekend and Monday. And you think about our supply demand picture, it still feels like that we have a lot of supply and still try to find more demand across all the major commodities, corn, beans, and wheat. I mean, what's your perspective as we're kind of working through the early to mid part of U.S. harvest here in terms of that supply demand picture right now? Anything big stand out to you?
Well, it's the big picture stuff, and that's why I think you got to kind of be thinking ahead towards next year's production here on this move and start nibbling at it. Because when you look at what really the potential on the world level is for the soybean carryout, not just from a sheer tonnage standpoint of how many tons of soybeans are going to be in the world, it'll be a new record. If Brazil has a crop that is being projected right now, and again, these are projections. We need to see somewhat of trend line type yields to get there, but we know it's possible. And we just saw an above trend crop this year, and that's what we're thinking it is, at least the USDA is. And early yield reports would support that there's a lot of very good production domestically right now. But the world production for soybeans is going to be a very big overhanging thing here. And so, again, in big picture perspectives, when you get below $11 in beans, you do tend to spend some time around 9 for a while, maybe dip into the 8s before you really run back up and see another bull market cycle. So I think we kind of have to churn through this South American story here and deal with the idea of a very large looming world global stocks and stocks to use perspective for still months to come.
Looking over at the wheat markets too, I know we got some rally on Monday, then really they were kind of the biggest one that faded, I felt like, to some degree on Tuesday. At least I was looking at that on the surface. Thinking about that global picture as well for wheat. Obviously, a lot of issues with Russia, the Black Sea region, with dryness there. We did get some rain in Kansas City, wheat country here in the U.S. Overall, though, notes for you in the wheat markets, anything in particular that producers need to be watching closely right now?
Yeah, I think the market's given us a little bit of a boost here as we get into the winter wheat seeding time frame, and that typically is a little bit of a seasonal rally that we will get year to year. The world stocks and wheat are still, I think, between all three of the products, when you think about corn, soybeans, and wheat, have the friendliest story. The problem is it's U.S. wheat. It's typically the last resort wheat for buyers, and so I think when we get this rally in this period of time, we got to be thinking about what we're planting, right? And that's going to be marketed off of at least primarily the July contracts of next year for 2025. And I think you really just got to look at putting some floors in there and leaving some upside. So I really like using options in wheat. I think you can provide some pretty reasonable floors, and there's a lot of time value to sell on calls, and wheat carries a little bit more volatility in the options. So I like using that kind of collar position, buy a put, sell a call, get a floor under it, and make that sold call at levels that are reasonable and that you'd be happy with if the market did continue to go higher. But if we continue to see a large crop here domestically for corn kind of work its way into the system, that's probably going to keep some pressure on wheat values overall as well. So I think it's be difficult for wheat to really run away on domestic values. With the type of stocks to use that we're going to be looking at with the corn market.
Another wild card that can maybe impact these markets too here over the next several days, and I think about maybe even the cotton market where we've had a lot of volatility there, et cetera. We have Tropical Storm Helene, which is expected to rapidly intensify into a hurricane here and make landfall somewhere on the Gulf Coast and then bring a lot of rain to the southeast, mid-south, et cetera. I feel like a lot of folks are going to be keeping their eyes on that storm and some of the rainfall impacts that could come from that to maybe impact some harvest and things like that. Is that something that you think will be on your mind as well here as we go through the rest of the week, Brian?
Yeah, for cotton, we already saw a limit move from the previous hurricane, and so quality issues, harvest delays, these are all going to be things that are going to be impacting cotton. Cotton actually had what we would call a descending wedge on the chart, and it broke out of that to the upside. And so, the market is supposed to do, and again, I don't make the rules on these chart patterns. I just try to interpret them and educate people on what their patterns are supposed to do if they validate. And so that would take cotton back up to about 79.45 on the December contract, where that wedge started. That's quite a bit of upside, but if you get another limit move, you're not very far from that. We're trading above 74 currently. So I think the cotton market has some good upside, especially if the market starts to get a little bit more supportive about China. We talked about that earlier in the segment, but cotton's a Chinese sensitive market, or China sensitive market. And so if you get kind of a more bullish sentiment on Chinese demand for commodities, cotton is going to be one of the ones that benefits from that greatly.
Brian, let's wrap up with the livestock trade as well on Tuesday. For the most part, some moderate green on the screen across live cattle, feeder cattle, and hogs. I think some of those front month spot contracts, there was a little bit of red in all three. I think in terms of that catalog feed report we got on Friday, that felt about as neutral as you could get. It seemed like we kind of pegged it right on the money. Your perspective just across this livestock trade, anything big standing out to you right now we need to think about?
Well, one of the themes kind of earlier this month was really watching the October contract. This market's been in a 4-year uptrend. And so when we look about the uptrend on the chart from all of these lows that we made along the way, the October contract spent a lot of the month below that. And so we've kind of had a late month save here where the market made some lows. It kind of double bottomed from the lows we had in August. And we did see some buying to recover the market. And that was absolutely critical to hold this chart together right now. But I guess the question I still have lingering is whether or not this market has the gusto to make new highs, see new cash highs. See the futures market make highs above the highs we've already seen with what we know right now. And I still feel like the answer to that is no. And if the answer to that is no, then that means to me that we're starting a bigger picture downtrend. And so, unless something happens here, I think we've got weights that have moved higher. We've got inputs that have come down substantially. And the import market's going to be something that we're going to be continuing to import from other countries quite a bit. I just think this market, in a big picture sense, has already seen the highs, and so in a market like that, if we don't make new highs, we are starting a downtrend long term. And I think this bull market's really gotten tired. So you start getting neutral news. I think you get some rallies here. There's selling opportunities. At the very least, you have to lay puts under this cattle market. And I think we've gotten the economy because of the rate change and the Fed. As we've seen the stock market rally because of the Fed, that's also provided some support to the cattle market. A little bit of economic sentiment has helped that market tremendously.
Good perspective as always. Brian, as we close it out, anything you want to reiterate to folks or anything final you want to add here this week?
I think I beat it to death, but again, bushels that you cannot store, focus on getting them priced on this rally. This is an opportunity for those bushels, and I'll just leave it at that.
Fair enough. Well, I know folks can find more at agmarket.net as well. They can reach out to you and the rest of the team there if they have questions, want to talk through marketing strategies and more. And with that, Brian Splitt, always good to talk with you, sir. Appreciate the insight. Thanks for joining us on Market Talk today.
Yeah, thank you, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.